With the stock market so bullish, there is no question that it's been much easier for people to make money in the stock market since we've made a steady recovery from the overall lows due to the unfortunate COVID-19 pandemic. What's going on, team? It's Ricky with TechBot Solutions, and all I want to cover in this video are three different ways as everyone continues to talk about the market bubble, the market crash, that the market is too high. There is no question that this talk has gone around for the past 3 to 5 months since we've made a steady recovery and surpassed previous highs before the initial drop. So what I want to talk about are three different ways on how you can still be able to trade or invest with structure. I think at the end of the day, one of the biggest mistakes that beginner traders make is not have a plan. When you go in blindly and you do not understand where you're buying, where you plan to sell, or if things don't go according to plan, to have some form of risk management, because the only way that you can consistently grow your trading account is if you can control how much money you give back. So I came up with this very simple 3-step, and if you think that there is another way or a series of other different ways on how you are going to approach the market, please share it down in the comment section. I really hope that some of the people that watch this video can benefit from your 2 cents and from your approach as well. I just, again, want to make sure that my focus that throughout this video is, if we all had that same mindset that, hey, the market is overbought as we approach previous highs on /NQ, which is the NASDAQ future, then we would have missed out on all of this rally. And there is no question that even today, the market is very bullish, it's pushing up for literally no apparent reason just because it wants to end Friday on a green note, right? And there's so many news articles that literally can't make sense of why the market is up, but they're just trying to break records. There's no reason to overcomplicate what isn't complicated. Right now, the market is very, very bullish. Does it mean that it's always going to be like this? No. This also doesn't mean that you can't have structure with the way that you approach the market. So one of the first things that I want to talk about is the trailing stop loss or just an overall stop loss, right? Depending on where it is. I don't know if you're trading Amazon. I don't know if you've caught Tesla, right? As it surpassed $2,000 a share. There's no question that as of right now, especially tech-focused companies, they're much more on the overbought side. You can think whatever it is that you want, but when something pushes up 30 to 40% within a week to 2 weeks, there is no question that there are going to be pullbacks. And all I'm here to do is to remind you to have a plan B. If it doesn't continue to uptrend, as we all hope it does, and goes to the moon for you, but if it actually begins to pull back, as it's just how things move, that you have some form of exit plan so you don't give back all the money that you made already. So if you got in on Tesla at $1,700 a share when it was, approaching and breaking previous highs, and you've been able to ride this, I just want to make sure that you keep some money in your pocket. So one of the different ways is you guys can look a little bit more into this. A trailing stop loss will allow you that, if you have a trailing stop loss that sets a distance, right, of 50 cents, meaning that as Tesla continues to increase in value, this stop loss, this trailing stop loss, will follow and continue to move up as Tesla price moves up. But it will follow at a distance of 50 cents. The parameter of 50 cents is set by you. If you wanted to follow by a distance of $1, $2, whatever the case might be, $100, that is solely up to you. But this allows you to continue to ride the rally, but also follow with some form of exit plan as there could be a potential reversal. And of course, just the good old stop loss where, hey, I got in at $1,700. Right now, the EMA line on the 4-hour chart that has been acting as a support. I'm going to put my stop loss here at 19.45. So if Tesla breaks below that specific price point, I will be out of Tesla as, it broke its pattern and it's potentially going to be pulling back. So at least you have some form of exit plan. And although you didn't lock in profits at the very top, let's be honest, no one ever knows where the very top is at. So stop trying to predict the future and simply do your part and your future self a favor and have structure with the way that you are trading, and or if you're investing, then just make sure that you implement some structure with that as well. One of the things that not enough people talk about are the OCO bracket. And I want to use Amazon as an example. So Amazon, of course, has been thriving, obviously not as much as Tesla for the past week. Let's say I see a lot of value on Amazon and I wait for a pullback. Let's say I wait for a pullback and I'm able to get in at $3,100 a share. The really cool thing about an OCO bracket is that I can set a limit order to sell and a stop loss at the same time. So it's the best of both worlds. So if you think that when Amazon pulls back a little bit and you buy it at 31.60, you can set your stop loss if it breaks below the SMA line, as we can see that it's been doing a very good job not breaking below the SMA line. So a very common support level. So if it breaks below that, that could be a potential breakout pattern and you might want to exit by then. So by being able to set your stop loss there and your limit order, let's say at previous highs, because you think it's going to hit $3,400 a share, you at least do your job in managing your risk and locking in profits at the same time. And the whole thing behind the OCO bracket, what it stands for is one cancels the other. So when you set this OCO bracket, it will set your limit order and your stop loss at whatever price points you want. And when one gets triggered, the other one gets canceled. So that's the best of both worlds. And again, don't even just stop here with this video. Learn a little bit more about it and see if the order type of the OCO bracket is something that you can work well with. One of the last things that I want to talk about is reduced position size, something that not enough people are talking about. One of the things that I have been doing, and again, I'm just speaking from my experiences, I trade a lot of TQs and SQs. Obviously, as the market is bullish, it's in my best interest to go into TQs, as TQs is the bullish ETF. One of the things that I have been taking into consideration is that I'm not too sure if it's just me that struggles with buying into something that's super overbought, but I understand that direction is key. So instead of overcomplicating it, yes, every day for the past week has not been uber successful for me, but it's been consistent. And the really cool thing about this is that I've been watching my position size, and instead of when I normally can trade with 500 shares or 600 shares of TQs when it's at a better deal, because it's so overbought and there's so much downside potential, I do want to ride the rally and go with the momentum. So that's why I've only been going in with 100 shares, 150 shares, maybe 200 shares, just in case there is a change of direction. I can, again, do my part in managing my risk with very little damage because the dollar amount that I have at risk is very little. And all I'm here to share is by you reducing your position size when things become a little bit more on the overbought side, you begin to do yourself a favor. If the pullback actually does end up happening, you can quickly cut losses with, again, very minimal damage. So let me know in the comment section what you guys think. All I want to make sure that you guys do is moving forward as the market continues to rally, to have structure with what it is that you do. And the reason that I'm doing this is because I know that even when we did break previous highs, everyone was saying that the market is overbought and it's bound to pull back. But that hasn't stopped the market, and I don't think that should stop us as traders. All it means is that we need to be more selective and, again, implement more structure with the opportunities that we choose to take advantage of. So let me know in the comment section if you have a different approach on how you're trading the current market. I would love to learn a little bit more about it, as I'm sure other viewers would as well. I really do appreciate you guys' time. I hope that we earned your thumbs up. Don't forget to subscribe to the YouTube channel. And if you want to connect with over 289,000 like-minded individuals, all you have to do is click the first link down below to join our free Facebook group and free Discord chat as well. Also, don't forget, if you guys want to watch me trade live as soon as Monday, click the second link down below, learn a little bit more about the Learn Plan Profit group, and see if being able to watch me trade live in the stock market is something that you are ready for. Like always, team, let's make sure that we end the year on a green note. Take it easy.